Well, of course, we've seen the royal prank call tragedy and the international fallout overshadow the final ratings for this sector for 2012. Let's get some more analysis on the outlook for radio. We'll get that in just a moment. But first, back to our co-host James Manning from Mediaweek to take us through the final survey, survey number 8 from Nielsen. Let's have a look. We'll start with Sydney first and have a look at the numbers there. And as usual, we always see, of course, 2GB leading the way there.
Talking about Southern Cross Australia, it wasn't a great survey for their Today network stations. Today FM down a little bit, as was Fox down in Melbourne too. Right,
so Fox as well. And just turning to what we saw in terms of Brisbane.
Yep, Brisbane there, great survey for ARN up there. There's the Melbourne figures. Yeah, AW end of the year, and Fox still on top, but down a little bit there. ARN, fantastic business up there, 97.3, jumped to the top. Nova's still doing very well up there, and a bit of a break in the pack then back to both the Southern Cross stereo stations, B105 and Triple M off the pace.
Let's have a look at Adelaide too and what we saw there.
Yeah, another good one for ARN. They've ended the year very strongly. Mix finished the year on top. 5AA for DMG holding in there as a sort of only commercial talk station. Nova and Triple M again off the, but good survey for Cruise. They've done very well for an AM music station.
And ending of course on Perth there and Mix 94.5.
Mix, yep, and Fairfax is only sort of FM station 96, having a great survey to finish off the year up by 1.4.
And very close, of course, between Nova 92.9.
Yeah, absolutely, yep.
Let's get some more on this and get Bob Peters' thoughts on this as well, joining us from Melbourne, media analyst, of course, at Global Media Analysis. Bob, your thoughts on the 2012 ratings year for the major networks?
I think the big winner in 2012 has been DMG, particularly with the very successful relaunch of their second FM station, now branded as Smooth FM. It's gone particularly well in Sydney, but also very strongly in Melbourne, and performance ratings are almost double what they were a year ago in Sydney, and they're probably getting pretty close to their natural level, but they've certainly given DMG a boost. Combined ratings of the Nova and Smooth channels, probably nationally across the 5 metro markets, has probably lifted DMG's 10+ ratings share by about 12 to 13% year on year. So a very good result for DMG. The next best performer was the ABC's suite of stations. They rose about 1.5–2% year on year. Coming next was, interestingly, Fairfax. They started the year with some declines, but they've put in a pretty strong performance towards the end of the year, and that might have to do in part with the stability that they now have in the radio operations, given that the owner of Fairfax Media Group has said that they've taken the stations off the for sale market, at least for the time being. ARN started the year very well. Indeed, in the year ending June 2012, ARN was the star financial performer amongst the commercial operators. Audiences have slipped a bit in recent surveys, but ARN still performing well relative to previous years. Bringing up the rear amongst the majors has been the stereo network. There has been some slippage, particularly in the flagship stations, Today in Sydney and Fox down here in Melbourne. But nevertheless, Austereo remains the dominant rating and the dominant revenue-generating network amongst all of the commercial networks.
Yeah,
those would be the highlights, I think.
Okay, just quickly, Bob, we'll finish up with revenue next year. Do you think it's been a tough 2012, you haven't got a crystal ball, but what do you think?
Well, I think a lot will have to do with it might sound a bit funny, but I think the global economy will have an impact on the local economy, and that's what will drive advertising expenditure, including spending on radio next year. And I think in terms of what's going to happen globally, I think the much talked about fiscal cliff in the US, if the US were to go over that cliff, it would be very bad news for the world in general, and I think that would not augur well for the local economy. However, I don't think that will happen. I think there will be a a resolution to that issue, and therefore I would expect that the US, the world, and indeed the Australian economies will pick up from the start of the first half of calendar 2013, and coincided with that, I think there'll be a turnaround in ad spend, and I think radio will be one of the first sectors to benefit from that.
Bob, it's been...
So I would expect slow single-digit growth in the second half, assuming that the fiscal cliff it has not been gone over.
Bob, really great to get your insights. Thank you so much for joining us today.
Pleasure.
Bob Peters there from Global Media Analysis. All right, let's get a check now on the media sector's performance on the share market this week. Here's Chris Weston from IG.
Well, in terms of 10, really interesting stuff going on through there. Obviously, we saw the 230 million entitlement offer going through. The share price, which fell initially down to 23.5 cents, fully reflective of the valuation change with the FIC dilution that's gone through and the big downgrades to earnings per share over the next few years. But I think there has been some bullish calls, and clearly the fact that they managed to raise this amount of money removes a lot of the balance sheet risk that's going forward. They're going to be able to pay back this maturing loan in 210 million maturing loan in early March. They're going to have the balance sheet flexibility and working capital going forward as well. The big question now remains for 10 shareholders is, will they be able to attract market share? That's the big issue there, because every 1% move in market share or commercial share revenue impacts their bottom line by about $20-odd million, by about $25 million or so, and that's going to increase their discounted cash flow valuation by every 1% in that revenue share by some 14%. So they're very, very leveraged to improvement in their market share, and clearly if we do see them picking up, the share price will see some good upside going forward. Now the share price has levelled out and stabilised and is now trading towards 26 cents, so it's had a decent bounce. But again, the big catalyst now that the financial position is a much better position with 45 million in net cash is about market share going forward, and they will see some good upside if we see signs of life in that department. The other stock, Southern Cross Media or Stereo. Southern Cross Media now initially dropped on Monday down to just over $1. Has had a bit of a rebound, so it's currently trading around 105 at the moment. So clearly market saw this as well, so damaging to sentiment, and we'll probably see it in the doghouse for a little bit of time. It doesn't have any major long-term ramifications to the share price and potential earnings there.
All right, a quick check now with James Manning on the ratings for week 49, free-to-air top 10 first, and obviously out of the official ratings period.
Yeah.
But just seeing there, of course, we were hearing there about Southern Cross or Stereo, but some saying, look, its bigger challenge is the content pipeline coming through from 10.
Yeah, sure. They've got challenges on their radio front, but their their TV revenues are taking a bit of a knock, and it won't be good for going into 2013 with those regional figures for them, the affiliate of 10 in around the regional markets, and they've had some really low shares there.
Yeah, I'm just looking at the rest of the top 10
sure.
For free-to-air, and there you see 7 news and 9
cricket.
News and a bit of cricket as well. Looking at subscription TV, news that Foxtel is going to combine its movie network and Showtime.
Yeah, so it's sort of goodbye to the Showtime and movie network brands. Going to be sort of amalgamated into one movie offering that Foxtel will be looking after. 7 channels. The Showcase brand will be there, and a Premiere brand they'll be promoting. It'll be just the one movie package for subscribers.
Interesting to see Grand Designs Australia pipped it to the number 1 spot by Big Bash.
Sure, yeah. Cricket's doing very well.
Yeah, just as well, some news too that James Packer's moving into movies.
Yeah, Rat Pack's going to be the name of the Rat Pack. Sorry, is going to be the name of the company. James Packer and his partner there, Brett Ratner. So they're going. So we're still sort of investing in media. They said it's very sort of small investment for them. So it's not a big profile for them.
Telstra and Fox Sports confirming the digital NRL rights.
Yeah, about $100 million there. They're going to have some mobile rights. Interesting, it's going to be a little bit shared though. Fox Sports will sort of also be streaming some NRL to tablets. The NRL rights will include some tablet games, also mobile phones, and I think laptops as well.
And just in some executive moves, whether, I don't know if she's the new Ita, but she's certainly among the youngest magazine editors appointed in Australia, Shari Markson.
Yeah, sure. A big task ahead of her, of course. Cleo magazine, not the sort of shining star it once was. All magazines are under pressure, of course, but Cleo down under 100,000 copies a month now they're selling. It and Cosmo used to sort of bubble around 200,000. Doesn't seem that long ago. Still a big readership, over 300,000, but they'd certainly like to stabilise that figure if they can't get it back up a little.
And just a reminder, of course, that next week we will be starting at 2 p.m. Eastern Daylight Time.
1 hour program.
That's right. Year in Review special. James, as always, thank you. That's all we've got time for. Thanks for your company.